Let's dive deeper into all the action with our markets reporters covering the different asset classes. Abigail, get us started. What are you watching?
Well, Scarlett, not participating in the risk-on rally and the record highs that we have on the day. Bitcoin. Take a look at this 15-day chart, down 14 out of the last 15 days, down 24% over this time period. However, today it appears as though Bitcoin is maybe trying to stage a rally. It had gone below 7,000, as the technicals have suggested would happen for quite some time. Right now, trying to hang on by a thread. Now, this is a multi-week decline. Clearly, let's put it into the context of a weekly chart. And over the last couple of years, we see, for the most part, a beautiful uptrend. But there was the Bitcoin bubble, 20,000, then going below about 4,000, coming back right now, hitting down on support over the last couple of years, Taylor. That's right around, let's call it 6,400. If these levels can hold, maybe we see a brief bounce back higher. But this chart probably suggests we may just see a test down to that 200-week moving average below 5,000. Could be painful, but the long-term message is bullish for Bitcoin, but some real near-term chop, Taylor.
Well, Abigail, I wanted to look at the health of the consumer as we head into that key Black Friday event that'll come this Friday. And so I wanted to take a look at the 12-month moving average of consumer confidence and then the consumer discretionary index. And if you come and take a look at a chart here that I'm showing inside my terminal, on a 12-month average, the consumer confidence index, remember in 2018, peaked in September and December. This year, it hit a 2-year low in September, and we haven't recovered yet back from those lows. And what that means is the consumer discretionary index, that is in blue here. It has fallen from a record that it set on July 15th. It is off now almost 5% from the highs overall in the summer. So at least for this year, it seems consumer sentiment perhaps starting to weigh a little bit on the discretionary index, which would be a shift from where we were 1 year ago. Mike?
Well, thanks, Taylor. I'm going to take a look at this huge rally in small caps today. The Russell 2000 up more than 2%. That's its biggest gain in 6 weeks. Sends the index to a 13-month high, and that's pretty significant since the Russell has not been setting new records like its large cap counterparts. In fact, today it's finally broke out of this trading range it's been stuck in since the end of February. Now, in that perennial question of growth versus value, what's leading this rally? Well, for small caps today, it's all of the above. Actually, the iShares small cap growth and the iShares small cap value stocks ETFs, both are outperforming the index itself, both up more than 2.5%. That's among the best performing big ETFs today, of assets of more than $5 billion. Now, part of this might just be investors catching up with small caps. Russell 2000 is only up about 20% this year, compared to about 30% for the S&P 500. I'm sorry, about 25% for the S&P 500 and 30% for the NASDAQ composite. But Romaine, it's been a long time since these Russell 2000 index set a record. Have to go all the way back to August of 2018, and it's still about 7% below that record, Romaine. So we'll have a bit more to go before we're celebrating a record in the Russell 2000.